Welcome back. You're still watching Markets at Noon. Let's touch base with a very interesting management. We have Mr. Murugavel Janakiraman, founder and CEO of Matrimony.com, join us right here on the show. Mr. Janakiraman, thank you so much for taking time out. And before we talk numbers and figures, etc., I want to know about how the business has been during lockdown and beyond. Because while the scale and the pomp and show of weddings may tone down in the post-COVID era, people will still continue to get married. The matchmaking business will still go on. But how has it been for your company specifically?
It has been good, and post the lockdown, we have seen increase in number of members signing up. While the Q1, the billing got impacted, as we speak, the billing has really moved up, and we expect this quarter the billing growth to move up in double digit. And so we expect a good growth to happen from this quarter onwards. As you rightly said, while the weddings have slowed down, but it has not dented the number of people signing up or number of people going for paid conversion. So for us, it has been a good, and we expect that momentum to continue.
Any significant trends that you would like to outline for us? The trends that you're witnessing in online marriages, overall marriage business during times of COVID, and more importantly, are these structural changes or just temporary phenomena, and you'll see things settle down by next year perhaps?
I think we are in a way at an inflection point because thanks to COVID anyway, it has increased the digital adoption in India. So the combination of multiple factors, I expect that the number of members signing up, that momentum to continue. So it's not, we see it's a temporary phenomena. We expect the recession growth to continue. That's on the matchmaking side. On the wedding side, while initially people have postponed weddings, and we see the off late that people decide to continue the wedding because we know that this COVID situation going to continue for some more time. Because the earlier people thought it be for maybe a couple of months, having realized that it's maybe here for quite some time, and not everyone wants to postpone the wedding. People understood that they need to have the limited scale wedding, and people are continuing the weddings. So that not happening at the grand scale and size that normally the Indian weddings would have. It is a limited scope and happening at a limited at the budget. So yeah, people also decide to continue with their weddings.
Quarters, your margins have been maintained. Sustainable? Are there enough triggers that you think will help you sort of maintain this space?
We definitely expect the EBIDTA and the profit to move up, because we're moving into the double-digit growth on the billing. While this quarter, because of the Q1 billing got impacted, revenue-wise there'll be impact in this quarter, but the billing-wise we are moving to double-digit. The impact of the increase in billing will translate to revenue in the Q3. We expect to maintain a similar level of profit in the Q2. Though the billing is going to move up, the profit will move up from Q3 onwards.
Right. Could you also just give us a qualitative outlook as to what does this sort of a thing does for Matrimony.com in the long run? A lot of people who were earlier not quite comfortable coming online, not quite comfortable meeting, wanted to go on the traditional way, will permanently come into this particular channel now?
Oh, definitely. Today, thanks to 2 decades of effort by Matrimony.com, even other players in this space, today online matrimony has become the primary call of anyone want to find a life partner. On the average today, almost 8 million members signing up on a yearly basis, combining all the matrimony sites put together, whereas Matrimony.com alone gets close to around 6 million members. So that way that the momentum is good and you expect to continue. It's no more of the last choice compared to what it was, probably a decade ago. Today it is the most preferred choice of someone wants to find a life partner. In fact, our expectation is that the category penetration today is around 12 to 13%. It's expected to double in the next 4 years. Thanks to many reasons. One thing about digital adoption, increasing smartphone penetrations and the internet usage in India and increasing online service in India, all these factors would contribute to the category, in my view, would double in the next 4 years or so.
Right, sir. Sir, also, I just wanted to understand, for growth, will you need capital now from here on? As and when the growth or the optimistic outlook that you're putting in, would you need to raise funds for that, or at this point of time, there is really no need?
No need. Actually, the company doesn't really require any capital. In fact, the matchmaking business operating at almost 55% gross margins. So while the 28% EBITDA margin in the last quarter. So while the marketing, one of the costs, we are almost spend 1/3 of our billing on the marketing. So in spite of marketing being 1/3 and we are able to generate 25% EBITDA margin, for the capex for matchmaking business, hardly any. So it's a cash generating business. In fact, for us, EBITDA to cash is almost 1:1. So it's a strong operating leverage business, cash generating business. And once that the growth is back, which again, as I said, we started seeing from this quarter onwards. In fact, the group profit will continue to move up and we continue to generate cash. So for us, the capex requirements are hardly any. This business doesn't require much capital.
Yeah. Thanks so much. Right. Thank you so much, sir, for taking out time for us. Always good to get perspective from you.